when it comes to the loan book and also the deposit book. But I think we have already plateaued as far as our deposit cost is concerned. So I don't think so that we'll have even more impact on this. And secondly, as far as the loan book is concerned, that also we hope that we will be having a repricing of the loan book also going forward. So I think the net interest income, what you are observing today, and what you mentioned in terms of the growth is something little than lower than what you expected. This is essentially attributed to that.
So it will only improve.
It is only. We are only. NIM actually, I think globally, if at all you will look at it in the industry, the NIMs have come down. But as far as we are concerned, we have assessed and we are hopeful that we should be in a position to maintain the NIMs at this level. And
okay, that was, of course, Dinesh Kumar Khara, who is the Chairman Managing Director at SBI. Spoke about various pieces. Let me just try and sum it up. First off, on the upside, he's given plenty of positive commentary. PAT at record highs both for FY24 as well as Q4. Wage revision expenses, despite being incurred, yet the balance sheet was able to absorb all of those and churn out a PAT ROE in excess of 15% in the last 7 quarters, which is extremely positive. Credit growth continues to remain robust. He spoke about the RAM portfolio. He also suggested that FY24 slippage ratio is lower than FY23 by 3 basis points on a lower base, which is a very, very positive piece. On the liability side, he said that he's looking at strengthening the current account number versus savings account where they already lead. Cost to income is yet to come off from above that 50% number, so still need to see progress, and that's possibly a lever going forward. Fee income, he believes, is sustainable. It's a very strong fee income number, 50% sequential, 24% year over year. That's probably what has led to this beat in Q4, and he believes that is expected to sustain. He didn't talk about how much of that number was a one-off, but it's expected to sustain, which is a positive, at least for me. And he's also spoken about RBI's draft paper and believes that possibly costing for some of these, or pricing for some of these loans may start to go up. He's also spoken about deposit repricing largely over and margin stability going forward. So plenty of positives coming through, Niraj, with regard to the commentary from SBI, at least the first cut of that commentary.
Yeah, well, and it's showing the stock still up about 1.5% on a day when the markets are down. Chakri Lokpriya with us as well, as is Rajesh Palviya. Gentlemen, thanks for being by patiently. Chakri, let me just first come to you on this SBI piece, and then we'll get in the market view, because that is the bigger worry. But let's just get SBI out of the way. What did you make of the commentary and the results?
SBI, I think, the numbers were excellent. It gives you a very good indication that the balance sheet is exceedingly strong. The outlook for the company is very strong in terms of its loan book. The balance sheet is extremely well positioned to absorb RBI's new provisions, even if they come about in its entirety. And their NIMs are going to be maintained at current levels, which is excellent, with an ROA improving to 1+, and an ROE is further improving, and its credit costs coming down. This is the perfect combination any banker would look forward to. And so I think, the next stop for SBI, it's a 1,000 rupee stock over the next 6 months. I think valuations are pretty much on its side. And this is the story for the broader market. Wherever we are seeing companies able to take market share, beat guidance, provide an outlook of improving scenario, will be rewarded.
Okay. Well, but the market at large seems to be a bit wobbly. Banks are correcting. Rajesh, sorry we had to cut to SBI, but let's get back to your thoughts, because we are now trading at the low point of the day, sub 22,000. Does it open up more downsides, or are you now starting to hunt for supports?
So Niraj, Nifty is now trading almost near to 22,000 mark. So we have broken the important put-based concentration in this fall today. Now we are trading below to 22,200. Nifty now slipped below to 50-day moving average and now approaching to 100-day moving average support area. So looking at the recent fall in last 4-5 trading session, the near-term trend has turned on the bearish side. If at all Nifty breaks below 22,000 mark, then yes, this fall can extend further, and Nifty may slide further towards 21,800. That's the next important support area for the Nifty, or based on the put concentration at this juncture. Sell on rise would be the strategy at this moment till Nifty not able to take out about 22,250 on a closing basis. So whatever minor pullback if we get in the market should be used as a selling opportunity for Nifty, as the broader market is showing supply pressure. Most of the sectors which were in bullish zone are attracting the profit taking at this moment, and the underperforming sectors are getting more short selling at this juncture. The major dragger is banking sector at this moment. Bank Nifty has slipped below to 48,000 level, so that's the negative development at this moment for the Bank Nifty. So if it remains below to 48,000 level, then possible down move can extend in the Bank Nifty also, and then lower side target we could see towards 47,200 also. So for Bank Nifty, 48,000 is very challenging level at this moment for near term trend. So we believe that sell on rise should be the strategy for trader at this juncture for Nifty as well as for Bank Nifty.
Okay, more bearish, at least at the outset, Rajesh. Rajesh, let me, in this market, understand your picks before we move on.
So first pick is Titan, that is on the short side. Stock is now slipped below to 200-day moving average. The way stock has broken its important support area on daily, weekly time frame, that clearly shows that some liquidation is taking place, and we may see furthermore bearishness in the stock. We are projecting target towards 3,200 to 31 90 kind of zone on the downside. So Titan future one can go short. Keep your stop loss at around 33.10. The sector where we are seeing some buying interest, that is automobile, and from that space Hero Motor is looking promising. So here we are bullish for Hero Motor at this moment, as whole automobile space is still holding the ground on the higher side. So we believe that some outperformance is likely to there in automobile space, and Hero Motor is our preferred choice. We expect that Hero Motor, if it continues to hold above 47.30, then possible rally can extend for Hero Motor towards 48.50 to 48.80 kind of zone. So these two stocks at this moment we are focusing on for trading perspective.
One positive, one negative. Quickly, Rajesh, if I can have your views on SBI.
So overall, SBI structure is bullish, though market is volatile. That's why we are not seeing, despite results, stock is not able to give any pullback action. I think once market stabilize at a certain point, SBI is ready to show a good traction in terms of buying, and possible target for SBI we can see towards 860 to 870 also for short term basis. So I think SBI one can remain on the long side of trade. Keep your stop loss at around 805.
Okay. We need to slip into a quick break, but we'll come back from the break, talk about a bunch of other things. We haven't quite discussed Larsen & Toubro thus far on the show. Asian Paints is the other big disappointment today, and there are a host of mid-sized names as well. So we'll talk about all of those. Stay tuned.
Okay, welcome back. You're watching India Market Close here on NDTV Profit. Thanks for staying tuned. Let me quickly take it across to Chakri. Chakri, your views with regard to the heavyweight Larsen and Toubro. That one has corrected nearly 5%. Let's quickly check as to how much, but roughly 5% odd. Is this a good opportunity in your view?
Indeed, I think it's a great opportunity to buy Larsen Toubro. The weakness is probably because, their margins came in slightly weaker. In the current environment of high interest rates, the fact that, they could still expect to grow their order book and another 10% going into the next year is a very strong indication of the kind of revenue growth that you can expect from the company. And as interest rates come down in the second half, whenever the RBI starts cutting rates, at that point, the margins again will start improving. Pricing overall will improve. I think L&T clearly is a buy because it's all the various segments of the businesses are actually doing well.
Chakri, the fact that there is a bit of a lull around election season spending, does that not worry you? And if not just for L&T, but does that argument get extended to some of the other construction infra companies that for the foreseeable future, there will not be new ordering as well as execution might also see a bit of a pullback?
We're already in May. I think, as elections will be done and dusted in less than a month by June 2nd, 3rd. So, the ordering will be whatever came to hold will again come back to life in about a month from now. And, it is very clear that, the industrial activity is very strong. Today's, for instance, you spoke earlier about SKF. It's a company which benefits from strength in automobile industry, industrial segment, railways, and defense. And it grew like 45%. So it's a good indication that these various sectors that it caters to are all actually doing really well. So, while infra, usually traditionally, it slows down in this time of the year, election and additional factor will pick up in a month or so.
Okay. By the way, it's not just L&T. Some of the capital market plays today have come off. So Motilal Oswal is down about 8.5. Angel One is down about 5.5. I wonder if some of the others too are correcting in trade today. But it seems that the pressure is across the board. And it's also there on Asian Paints, by the way. So bring that stock up. That's the other index major, which after falling 2.5% yesterday is 4.5% down. I would reckon this would be 52-week lows for Asian Paints. I may be wrong. But I think these are the lows for the stock. Priyam Tolia, Senior Research Analyst of FMCG at Axis Securities, who tracks Asian Paints, joins us right now with his verdict there. Priyam, what did you make of the numbers?
So, yeah, the results were pretty much lower than our estimates. Of course, the other results were missed on across line items. The most disappointing part was on the top line growth as well as on the margins front. So as management has highlighted that they have delivered a 10% volume growth. But this was on account of the price cuts which company undertook, mainly on account of the on increased competitive intensity from the graphene, as well as the weak demand environment. So yeah, the numbers were pretty weak for Asian Paints.
What's the outlook, Priyam, going forward? Do you therefore now start to change your estimates? I understand that the con call is still awaited, some commentary is still awaited, but what's your initial feeler? What's your initial sense? Do the estimates going forward start to get impacted given Grasim has come on board, and should one start to factor that into numbers?
So yeah, what we expect is that, and of course we have a neutral rating on the stock as of now, but we will look at the final numbers post the con call. But if you ask me from a near-term perspective, then of course there could be a margin pressure in the near term due to the price wars which is likely to come up on account of the new player which has entered. And of course the trend has not picked up. And if you see from a commentary from the press release, commentary from the management has said that they are positive in terms of the demand environment going ahead due to good monsoon. But what we feel is that the meaningful recovery in the paint sector will likely to start from the second half of the year. Right. So from a near-term perspective, what we expect is that there could be a pressure on the margins as well as the top line.
Sure. And recovery in decorative paints, we've seen some pressure there. Any visibility
Yeah,
in your
if you
view? Sorry, yeah, please go ahead.
Yeah. So if you see decorative paints, the premium side of the portfolio continues to remain under pressure, which was also in the Q3. However, if you see from a value and value side of the paints, they are doing well, right? So consumers definitely are downtrading in terms of that, right? If the consumers are downtrading, there could be a margin pressure as well on that side, right? So what we feel is that the near term, that we don't see a meaningful recovery for Asian Paints, but going ahead, we will see how the things pan out in terms of the demand as well as the competition.
And with regard to rural, last off, we've seen rural commentary come in, talk of green shoots and the like. What's your sense of the impact on someone like an Asian Paints?
So again, we'll have to see how it pans out. Those more of the FMCG companies and other consumer companies have highlighted that they would see good rural recovery in this year. But from a paints perspective, as the competition intensity has increased, which will be the key monitorable going ahead, right? So how the competition intensity pans out, which will define the future course for the company as well as the industry.
Okay, thanks so much, Priyam, for joining us, giving us those insights, specifically with regard to Asian Paints. But let me take it across to Rajesh. Rajesh, Asian Paints under some bit of pressure today. What's the sense like for you? What are your trading calls on this one?
So there is an underperformance in the Asian Paint if we compare with other companies, other peer companies. Looking at the overall structure, stock is in a bearish trend at this moment, and now stock is approaching towards its critical support area of Feb 2023 swing low. So I think if stocks further fall from here, if it breaks below 2700 level, then this down move can extend further. As looking at the monthly, weekly time frame, stock is still in the bearish mode, and the stock has broken its important near-term support area also. Stock is slipped below to all its long-term, short-term moving averages. So below 2700, there could be another round of selling pressure we can see, and possible downside can be seen towards 2630 to 2600 also. So now on the higher side, 2760 and 2780 are likely to act as a major supply zone for any kind of minor pullback in the Asian Paint, and trend is likely to remain on the bearish side for some more time.
Okay. What's standing out, of course, are some green pockets, Hero Moto, TVS Motors, and Tata Motors. So autos, M&M and Bajaj Auto too in the green. Somehow autos have withstood the selling pressure quite convincingly, I might add, because these are not chop change gains. I mean, 3% is pretty serious for a Hero Moto Corp on any given day, and especially on a day like this. Chakri, a word on this very large market mayhem that we're seeing in volatility, and then followed up with a view on autos, because they're kind of standing out very, very well post results.
Indeed, I think as we go closer to the June election date, I think, this volatility number will kind of increase because of the uncertainty about, day-to-day change of mood, what do you think is the outcome is going to be. And then that actually is kind of throwing up some opportunities, because you have some very strong companies reporting some very strong numbers. So if they, for example, that SKF we spoke earlier, now that whole segment, since you said autos, that's also an indicative demand. If SKF does well, NRB Bearings, Timken, all those companies do well. They're also doing well in part because autos as an industry, amongst other industries, is doing very, very well. Now, if you look at Hero Motors and Tata Motors, TVS Motors, both have taken increased market share. Exports markets have improved. Margins are improving. And, the pricing is actually holding up. In a tough competitive market, if you can do all of these things, I think the volumes will only pick up in next half, in the second half of this year, and therefore I clearly continue to be positive on Hero Motors and Tata TVS Motors as well as Bajaj Auto.
Okay, but while autos are looking okay, we're now trading at the lowest point of the day for the Nifty. Keep that in mind, 21966. 1.5% lower for the Nifty. So it's now looking increasingly worrying from anybody who's looking at leverage trades on the long side, because save for autos, nothing else is working, and the index itself is trading at the lowest point. HDFC Bank, big contributor to the Nifty, very big contributor to the bank Nifty's fall as well in the session today. And hence, I believe Rajesh was talking about how it's a sell on rise market, certainly not currently a buy on dips market. Rajesh, but autos have held out well. Do you see a probability of outperformance, or looking at the market scenario, avoiding longs is maybe a more preferred bet?
Yeah, I think avoiding long for trading point of view, yes, avoiding long is the best strategy at this moment, because the market sentiment is not good, and the way market is showing the selling pressure across the sector, that will not hold out auto also on the higher side. We may attract some profit taking in automobile also if market continues these kind of supply pressure. So I think for trading traders, I think they should avoid at this moment on the buying side of trade. Look for some opportunity when some pullback comes in the weaker sector and the weaker stocks. That stocks can be looked at to go short at this moment, or the stocks where we have seen very significant corrective move or trading near to the major support area, that can be looked at for some pullback action. But I think first Nifty needs to be hold out at certain level, because since morning we are seeing that continuous supply pressure is there, and even if you look at the now Nifty is slipped below to 22,000 level, and we have weekly expiry for these options, and the way put writers are trapped in this today's fall, they are now shifting their position on the lower side, and they are adjusting their positions and losses. So I think that furthermore supply pressure we may see in the coming trading session also. So at this moment we advise to avoid on the buying side. Don't take a larger quantity even if you are buying at this juncture.
Okay, clearly not in favor of buying at the moment, Rajesh advising. Let me though switch focus to the auto pack. Niraj did mention that that one is doing fairly well, holding up fairly well on a tough day of trade, 457% higher on the Nifty auto. We have Hero Moto Corp, which reported the highest ever profit, while TVS Motors also posted healthy margins. Both stocks have seen significant gains in today's trade. Look at the top two on the Nifty auto, 3.5% up, both of them. So what are brokerages suggesting, and what are those key takeaways from both brokerages as well as the results? Puneet joins in with all of that.
Yeah, thanks for that. So Nifty Auto being the biggest gainer today on the back of these two positive results. Just for TVS, the numbers came after market hours, revenue up 23% compared to the previous year, while EBITDA also grew roughly 36%, coming in at roughly 11.3%, which is now the new normal, as the company said. On the PAT level, profitability is up roughly 18%, and the positive view was supported by the brokerages as well. Key highlights for the quarter was the first time ever is the company selling upwards of 40 lakh bikes in a financial year. While they said that they will also be introducing multiple variants of the iQube, which will be key to compete with the likes of Ola as well as Ather. While they also mentioned that they will going to be starting to export the iQube to the other ASEAN markets. On brokerages, because of the valuation, Citi has a 22% downside from the current levels, coming in at roughly 1,550 rupees. They say that it was an operational beat on the numbers, as well as expecting high healthy demand for the two-wheeler industry in general. They say that the multiple launches in the two-wheeler and three-wheeler planned by the company is a key positive, and this same view was echoed by MK as well, which has a target price of roughly 2,250 rupees per share. Moving on to Hero Moto Corp, we see that the results, as you rightly said, highest ever profitability. Revenue growth was strong at roughly 15% as well, while margins was up 25%, coming at roughly 14.3%. The company also highlighted that this would have been higher by roughly 130 basis points, but the EV division is currently loss making, so that's why the overall margins have come in at roughly 14.3%. brokerages have been very positive on Hero Moto Corp with Citi target price of roughly 5,500 rupees per share, which is an upside of 20%. Healthy realization as well as margin trends are a key focus area for the company, while premiumization focus, as we know, is going to be key going forward as well. MK has a higher target price of roughly 6,000 rupees per share, which is a 31% upside from the current levels. They've said that the Q4 performance is in line, while management has highlighted for the first time that the first-time buyers in the rural market might finally be back. So overall, a very strong picture on the two-wheeler space. Started with Bajaj, both Hero and TVS today echoing the same. Back to you.
Okay, yes, so absolutely strong numbers. Another percent from here in terms of margins will be extremely strong. And MK has upped their target price along with a couple of other brokerages. MK's earlier target price was 5,100, now at 6,000. So clearly bullish. But let's slip into a very short break. More on the other side. So stay tuned. We'll continue to talk specific stocks, try and get you more perspective.
This is, of course, the volatility, the election trade, volatility on the Nifty. We know that VIX has been high, but this kind of signifies the kind of points that have happened from the first phase of the election, thus till now, and you can clearly see the kind of divide that has come about in between a phase of a rapid rise, if you will, and then an equally swift fall. And a swift fall it is, because now we are at nearly 2.5% or nearly 3% down for the small cap index, and the Nifty too is now very close. Forget 22,000, it's very close to 21,900 odd, or 30 odd points away from there. So it's actually very swiftly come off as the Nifty. 363 points now. Rajesh, you were rightly saying that this is not a buy on dips market because it's sunk further today. I'm just trying to understand whether or not you take a trade, but what are the levels that you're watching out for on the Nifty per se, or even for the small caps for that matter, which are down 3% now?
So I think, Niraj, as I mentioned, 21,800, where we see that, Nifty can continue this fall further. So I think another 150 point fall we can see in the continuation of this down move. The way Nifty has broken its 50-day moving average, and there is no as such recovery coming from any of the sector. It's a continuous supply pressure. So market is sensing something else at this moment, and despite of earning, there is no disappointment, major disappointment from the earnings. Also, market is not giving any kind of thumbs up to those earnings also, and stocks are continuously showing the profit taking. So I think some bit of cautious approach we can say at this juncture from the market participant, and they are taking some profit on table and they are booking the profits. That's why Nifty has now broken decisively below 22,000 level. 21,800 is the level where we are focusing for the Nifty in the continuation of this fall at this moment.
It certainly looked very, very wobbly, and just the point contribution shows how SBI now is the top contributor and to the gainers. But except for that and autos, there isn't quite too much out there in terms of a cheer for the large cap space at all. So bear that in mind. Now, Chakri, today it was not just about results. There was also this whole spate of regulatory moves that are happening. And we know that what RBI has done to some of the NBFCs, but now this comment coming in about even gold loan companies and how the disbursals should be restricted, particularly on the cash side. And while the companies themselves have said that it may not be as big an impact, the market doesn't seem to be liking that.
Indeed, when the sentiment is kind of weak, the way it is right now, any negative news is taken even more negatively. And I think because the RBI's provisions are, actually, if long story short, it'll actually improve the balance sheets and therefore make the company stronger, which would improve the multiples because, the valuation, the margins will improve. But, that's a story for another day. But on a weekday, I think, I think it's best to remain on the sidelines rather than chasing stocks which are already done very well.
Chakri, do you think it's just sentiment, or do you also believe that valuations are looking on the expensive side? In the run-up to maybe both the elections as well as Q4 numbers, were valuations looking on the expensive side, and therefore every piece of slightly difficult news is now met with a adverse reaction, and every positive news not really rewarded in that sense? Is that what is really playing out, or is it sentiment?
I think it's partly sentiment, because if you look at what happened, for example, with Titagar Wagons, Jupiter, there's railway companies, they reported exceptionally strong numbers yesterday and a couple of days ago. And in spite of the stocks having gone up like 5 times, 10 times over the last couple of years, the stocks again went up. And you look at their multiples adjusted for the new order book, etc., the new revenue growth, their multiples are still reasonable. So there are enough pockets within industrials, railways, defense, even infra, and even banks for that matter, where adjusting for the earnings, the stocks are looking reasonable. So there's enough pockets that you can find to. But since there's already money made, I think on days like this, it's easier to take money off the table.
And in terms of a trade, Rajesh, with regard to Manappuram Muthoot, should you venture at all in some of these? I know overall you're pretty adverse at this point, but Manappuram Muthoot specifically, and what should one do if one is already holds long positions?
So I think structure for Manappuram is on the weaker side, and the way stock has broken its important support area on a daily as well as on the monthly time frame, that clearly shows that we may see furthermore supply pressure. Looking at the near-term, short-term structure, now stock slipped below to its important moving averages. I think the next immediate support area for Manappuram is now placed at around 158 to 155 zone. If at all stocks holds those levels, some pullback action we can see from those levels. Though stock is already in oversold trajectory, this is the 6th consecutive day where we are seeing supply pressure is there in the stock prices. So I think around 158 to 159 zone, one can try to buy some contra bet around those level with very strict stop loss of 155 for just to play a pullback action, because it's a very important and critical support area for the stock in this decline. So I think wait for another 2 to 3% kind of fall in the stock, then again review around 158 zone. For Muthoot Finance, stock is now almost trading near to its important support area of 50-day moving average. So here, yes, structure is on the bullish side. Stock is still holding the previous breakout, which we have witnessed in last couple of weeks. So looking at the overall structure from Muthoot Finance, if it's a hold above 1530, 1535 level, then yes, this stock may attract some buying interest, and then possible upside towards 1640 to 1660 we can see in the near term basis. So Muthoot Finance is looking attractive at this junction on the technical side.
Attractive, at least got something from Rajesh with regard to a positive there. But let me quickly move across. HPCL in focus on the back of numbers, of course. Company came out with a strong quarterly growth in terms of earnings. Company also announced 1:2 bonus, but the stock absolutely languishing in trade. Mihika is here with both HPCL to give us the context, break down the details, as well as BPCL. Mihika, what can one expect?
Yes. For HPCL, now revenue beat estimates. EBITDA did miss estimates by 6%. However, profits were in line, and profits were up 5.3 times compared to the previous quarter. And revenue did see an uptick of 2.6%, which was expected. And margins were expanded 225 basis points. The company also approved a bonus issue, 1 share for every 2 shares held, and a record date for the same is June 21st. In terms of crude throughput, there was a 9.4% sequential uptick at 5.84 million metric tons, and the pipeline throughput was down 3% quarter on quarter to 6.5 million tons. The FY24, the average gross refining margins were down 25% at $9.08 per barrel versus 12.09 per barrel last financial year. However, it is key to know that FY24 did see an overall 9% uptick in Brent crude prices. When we talk about Bharat Petroleum, we do expect a 1.4% revenue uptick. EBITDA may rise 40% on a quarter-on-quarter basis, and net profit may rise 57%. Nomura has noted that Bharat Petroleum will benefit from the sequential rise in their refining margins. They estimate $15.9 per barrel, and they also expect rise in the marketing margins about to the normative levels, and they also expect inventory gains on the back of higher crude prices.
Okay, thanks a lot for that, Mihika. We'll watch out for BPCL and, of course, HPCL. It's corrected in line with HPCL as well. Chakri, quick thoughts here before we thank you on the oil marketing companies, and what did you make of HPCL results?
Given the volatility, in oil prices and, whether you will pass through or not, the prices, the margins are always suspect. So I think I'll stay away from HPCL and BPCL.
Okay, thanks, Chakri. Rajesh, your views and also quickly on your BTST ideas, if any.
So HPCL, if I look at the technical structure, stock is now approaching to its important support area on the daily chart, which is placed at around 495, 498 kind of zone. That is coincide with 50-day, 20-day moving average. So that needs to be closely watched for next 1 or 2 trading session. If it holds these levels, some pullback action we can see. On the higher side, 515, 520 is the key resistance area. If it slips below to 495, then I think this supply pressure may extend towards 485 also. At this moment, there is a STBT. UPL is short. Stock has given a breakout of its upsloping trend line. Stock structure is weak. Stock is making a series of lower top, lower bottom formation, and the way stock is going down in last couple of trading session, we expect that further more supply can continue. 450 is the downside target for UPL. Keep your stop loss at around 474. And the second stock is on the again on the sell side, that is Jindal Steel and Power. We see some selling pressure is again attracting in the metal space. Jindal Steel and Power is now negotiating with its 20-day moving average, looking at the supply pressure in most of the metal stocks. And throughout the day, we believe that Jindal Steel Power can go down. 905 is the immediate target on the downside, so one can go short with stop loss of 938.
Okay, gentlemen, we'll leave it at that. Thanks so much for taking the time out and being with us, both Chakri as well as Rajesh. Really appreciate your time this afternoon on a tough day, I might add. But as the market's coming up to a close, we can only say that it's been more than a wobble, because this is some serious selling that has happened today. 21960, I'm really keen to note the FI numbers as they come and the turnover as it comes today. So it'll be important to see that. No prizes for guessing that most stocks are in the red. But if you just look at what's happened to the Nifty intraday, I mean, just the fact that we are closing at the lowest point of the day doesn't augur all that well. Right here, look at that. This is the lowest point of the day, and we are ending here. And multiple stocks, HDFC Bank, Reliance Industries, have contributed to this and not made the picture look very pretty. But yes, the top losers are LLT and Asian Paints. But if you look at, I think Reliance down about 2 percentage points, and HDFC Bank about 2 percentage points as well. They would be amongst the top contributors, if not the top 4, but certainly amongst the top contributors. The fact that L&T has fallen 5.5 really makes it the biggest contributor to the losing cause. But like I said, it's not just the large caps. As 10 seconds left, the mid caps too have had a wobble, and Hersh will take us through that. But just pull up the BSE 500 picture. Nevertheless, while Hersh comes in, and the top losers and gainers will come up on your screen, and that will give you a sense of how bad the picture has been.
Well, yes, earnings heavy, Niraj. Look at an SKF, look at a Godfrey Phillips. Tata Investment also up roughly 5% Paytm is one which stood out because last 2 trading sessions it's been on lower circuit, 5% lower. It hit its 52-week low earlier today morning, and it's up 5%. So interesting to see what will happen to that one tomorrow. But some of the other earnings candidates, look at a Piramal Enterprises down 9% plus. Of course, some on the back of specific action like a Mannapuram. Also down roughly 7.5% but it's been a tough day in general for the broader markets more than the benchmarks.
Yeah, and the capital market plays come into
yes, Motilal Oswal and the like, even an Angel one, probably the within the top 10. Even the PSU plays actually, Niraj. Now that you pointed out, let's pull up something like an NMDC, an NHPC. Some of those really taking a battering in trade today. If we can also pull up maybe a BHEL to try and get context, nearly 5% lower for almost 4 to 5% lower for each of these. So some of those pockets seeing more, the selling more heavy in those pockets than others, but nonetheless, it's been a tough day. There you go, Nifty PSU down 3.2%.
Yeah, and it was evident in the large cap space as well, with the coal Indias of the world really coming off in the session. So PSUs have certainly taken a big knock. But, well, glad the day is over. If you're a bull, you'd be happy that the day is over. For now, though, from Hersh and me and the team that has put this show together, thanks so much for tuning in. Tomorrow, starting 8 a.m., including election trades, we'll tell you all that you can do. Actually, starting 7:30 a.m., do join us to give you a complete snapshot of what could happen tomorrow after what has been a rather tumultuous day of trade.